opportunity for holding the first webinar from this coming financial year to 22-23. And we are feeling proud that Bombay Stock Exchange, the Chief Operating Officer, the very first day in the first half of this particular session on the auspicious day, we are holding a very good important topic, that is asset allocation for the vital for wealth creation. Sir, whatever the studies which I have with me, speaking about the asset allocation involves the dividing of the investments among the different assets such as stock, bonds, and cash, which may be for personal use. We and the change, and it has been changing with the times. The best way to create the wealth is the sound asset allocation. This is the information which I have with me. The
Yes.
normal procedure, what the portfolio managers have discussed, that is 60% of the stock should be invested and 40% should be invested in bonds, and it should balance the risks as well as the reward. The equity stock, debt market, the gold market, as well as the real estate and the cryptocurrency are the different stocks for the proper wealth creation. Sir, we are feeling proud. The SST College of Arts and Commerce are feeling proud and delighted that we had holded a 5-day workshop in the last of financial year. We also hold the Bombay, with the Bombay Stock Exchange, we 3 days faculty development program. We also hold it with the student development program for the year 21-22, and for 22-23 in the first day itself, and the first half of the year, that is 1st of April, we are having a very good speaker, Dr. Aditya sir, introducing about his profile, what we have it with me. Aditya sir, Dr. V. Aditya Srinivas is the Chief Operating Officer and the Chief Economist at the one of the best and oldest stock exchange in India, that is called Bombay Stock Exchange. He is working at the Bombay Stock Exchange Forum for total with a total 16 years of corporate experience, and he has been represented India at Harvard, Japan, Maldives, Oman, Dubai, Hong Kong, and many more countries. He has conducted more than 2,000 sessions on Indian economy and has trained at least 65,000 participants. So students, we are very good, very experienced speaker speaking about the asset allocation for the wealth creation. His qualification is BBA Finance, MBA Finance with a gold medal, and PhD in Economics and MDP from IIM Ahmedabad, one of the best institute in India, as well as he has been awarded D Literate, that is Doctorate of Literate from USA ISO 9000 lead auditor. Students, he is a lead auditor in this particular firm and has represented 23 research papers, is in national and international conferences, and has published 35 papers. So students, with us, we have very good speaker, Dr. Aditya Srinivasan sir. Sir, I'm handing over the session. I hope the students would be enjoying it. Thank you from my side. Over to you, sir.
Yes, sir. Friends, a very good morning to all of you. Welcome you all for this today's webinar session, and really thank S.S.T College of Arts and Commerce for organizing this interactive session on the very first day of the new financial year. May God help us all to prosper financially, because today financial prosperity is one of the key things in life, friends. And that is why investments today have become very, very vital, friends. See, it is no longer something which earlier used to be a concept that investments and other things are for the rich and the mighty. No, it is not the case, friends. Investments, financial planning, asset allocation, these things are actually more important for the middle class and a common man, because unless he plans out his finances well, he cannot primarily take care of himself and his family well-being. Hence, this is very, very important and vital. So today, friends, we will be understanding this very, very important aspect. To start with, friends, today we will understand this whole topic with a nice PPT, and then we will go for a Q&A round. Just one second. See, friends, basically asset allocation. See, what does it actually mean? See, asset allocation means that you are putting your hard-earned money, that means your earnings, into variety of assets like equity, mutual fund, gold, insurance. So these are important aspects of investments. Today, if you see, friends, asset allocation is very, very critical and important. And in the current scenario, if you see, asset allocation should try to achieve two things. See, first is diversification and second is decent returns. See, why diversification, friends, is the main concept of asset allocation. The logic is basically whenever you invest money into variety of assets, obviously your risk gets reduced. The logic is very clear, friends, that not to put all eggs in one basket. Correct. This is something very, very vital and important, not to put all eggs in one basket. So even in normal rule of investment says that when you are putting money, you should always bifurcate your investments into variety of assets so that risk is diversified and you are not in a difficult kind of situation. This is something we have to keep it in mind. The second aspect of basically asset allocation is what we can say decent returns. See, decent returns means that when you are putting your investments, your money should grow. That is the whole objective of doing all this exercise. Otherwise, it is no point. So basically, putting your money into variety of assets is again equally important, friends. It is very, very vital. Decent return means that you are able to beat inflation and you get higher return. So that is basically the whole objective of decent returns is. So this particular aspect we have to keep it in mind. Remember one thing, friends, that diversification and decent returns, these two things play a very, very critical role when it comes to asset allocation. Diversification and decent returns. Here we have to understand that when you are putting your money into variety of assets, one needs to check the risk and return appetite, and at the same time you have to understand what is your overall what we can say risk and return expectation. So this particular aspect becomes very important. Remember, friends, asset allocation is the key for your overall investment scenario. See, whenever you are planning out your asset allocation, friends, three things you have to keep it in mind: capital appreciation, safety of capital, and liquidity. Capital appreciation basically refers to that when you are investing your capital, when you put your money, you should be able to generate at least 12 to 15% return. If you are able to generate that kind of return, then that is a good example of capital appreciation. Friends, capital appreciation is very vital. The reason is that when you put your money and if the capital grows, then only you will be able to enhance your standard of living. And that is why, friends, asset allocations, one of the critical objectives is capital appreciation. Capital appreciation, friends, is very vital and important. Second important is safety of capital. See, safety of capital primarily refers to that when you are putting your hard-earned money, when you are investing your hard-earned money, friends, at least your capital should be safe enough. Correct. That is very, very vital and important. If your capital is safe, then yes, you will definitely be able to do a lot of things for the welfare. Your overall capital should be safe enough, friends, because at times what I have seen is that people in a hurry to make a lot of returns, they do such investments that the capital itself goes away or they incur huge losses. So remember one thing, that safety of your capital is again a very, very important aspect. That is something we have to keep it in mind. So that is why safety is something which you should always keep it in mind. So that is the second important aspect of your investment. And third, very, very vital is basically your liquidity. See, liquidity primarily refers to, primarily liquidity means that whenever you want to sell your assets and convert it into cash, liquidity is most important thing. So capital appreciation, safety of capital, and liquidity, these three play a very, very critical and a vital role. These three objectives one has to keep it in mind. Capital appreciation, safety of capital, and liquidity. These three are most important objectives of asset allocation. And if your asset allocation is achieving these three, that means your capital, what you have invested, is rising properly. Your capital is safe, at least the principal amount. And if you have sufficient liquidity, means you are able to get back your money whenever you want. That means your investment strategy is correct and you have been able to achieve the objective of asset allocation. So that is why, friends, these three objectives play a very critical and a vital role. Friends, Lot of people ask me that, sir, what could be the best asset allocation or what could be an ideal asset allocation? Now here, understand one thing, friends, that asset allocation is highly personalized in nature. Hence, it is important that when you are doing asset allocation, it has to be basically a judicious mix and it will always differ from person to person. See, each person's risk and return expectation, his risk and return taking capacity is totally different. Hence, basically, what will happen? Your listing will also differ. Your asset allocation will also differ. Three things are most important when it comes to asset allocation. One is age of the person, one is income, and one is expenditure pattern. Correct. These three tend to play a very critical and a vital role: age, income, and expenditure pattern. So here what happens is, when we are talking of asset allocation, friends, age is a very, very vital and an important factor. See, younger the age, if your age is less, obviously you are in a better position to do your asset allocation because you are young, energetic, aggressive, and at the same time, you are in a better position to figure out what kind of asset allocation you want in the long run. Plus, when a person is young, friends, he relatively has less responsibilities because he's yet to get married. Health will be in his hands, so he does not have much of a medical expenditure. Family and social responsibilities are also less. So, in that case, his asset allocation can be very, very dynamic, and he can even include risky assets. On the other hand, friends, a person who is middle-aged or slightly aged, obviously his asset allocation will be different and he will be less inclined to take risk. The reason is that a person who is basically a middle age will not be comfortable in taking more amount of risk. So that is why age is very vital, friends. Always remember, do we many times hear this saying that age is a number, but for all practical purposes, this number does matter, friends, because it is an indicative that what stage of life you are into. Second important aspect is income. Friends, income today has become the most important indicator when it comes to asset allocation or any other thing. Because if your income is high and income is stable, you will be in a better position to manage your assets. On the other hand, if your income is less or if the income is relatively what we can say a mediocre range, then in that case, obviously your asset allocation will be more of a plain vanilla type like FD, Provident Fund, which are of routine nature. If the income is high, one can go even with exotic asset classes like derivative commodities and such things. So that is why, friends, income plays a very critical and a vital role. Third important aspect is expenditure pattern. See, expenditure pattern is very important, friends. In expenditure pattern, remember one thing. What do you mean by expenditure? See, expenditure pattern means that if some person has a huge home loan, as some person has a car loan, or basically if some person is having a high medical expenditure, then in that case, what will happen is basically in that particular case, he will be in a situation where if you take expenditure pattern is high, income is high, then in that case, his asset allocation will narrow down drastically. Correct. His asset allocation will narrow down drastically. So this is something we have to keep it in mind. Remember one thing, friends, that as far as age, income, and expenditure pattern is concerned, asset allocation will play a very critical and a vital role. Here, remember one thing, that as far as asset allocation is concerned, it is an important aspect of investment. So these three factors can affect your working in a major manner, friends. These three factors can affect your working in a major way. Broadly speaking, friends, asset allocation can have two types. Just give me 1 second. Nothing. See, friends, broadly speaking, if you talk, asset allocation can be broadly bifurcated into two parts. One is equity and equity linked assets, and one is debt instrument. See, basically, when we talk of equity and equity linked assets, the whole objective is basically capital appreciation, and it would primarily include stock markets and mutual funds. So basically, the whole objective here is good amount of capital appreciation. So that is typically what we call it as equity and equity linked assets. On the other hand, friends, debt instrument basically means bonds, debenture, fixed deposits, provident fund, which give you fixed rate of return. Now here the whole objective is to get safety of capital and whatever little appreciation that is possible. So a judicious mix of two things, equity and equity linked assets and debt instrument, these both things can be broadly bifurcated and can be managed upon. So this is how, friends, one can try to figure out. So that is why factors affecting asset allocation can play a critical and a vital role. Here, remember one thing, friends, that as far as factors affecting asset allocation is concerned, it is an important aspect to be kept in mind. Remember one thing, friends, that basically if you see factors affecting asset allocation, then both type of assets should be there. One is equity and equity linked assets, and one is debt instrument. So on one hand, you have age, income, and expenditure pattern. On other hand, you have equity and debt instruments. So these factors together will basically finally define what kind of asset allocation you are having. Friends, an ideal kind of asset allocation could be this one. See, basically, this basically links your age group with your exposure. So primarily what will happen between 25 to 35 years of age, when a person is young, energetic, in most of the cases he is yet to get married, obviously he can take more amount of risk. So his exposure to equities is 75% and fixed income would be 25%. Remember friends, a thumb rule that 100 minus your age can be your equity exposure. So here, if your equity exposure is relatively less, if your age is relatively less, your equity exposure can be on the higher side. So this particular aspect is something very important. One minute, no, friends. So basically, what will happen between the age of So friends, basically what will happen, see 100 minus your age should be your equity allocation. So when a person is between 40 to 50, obviously he will be married, he will be having children, he will have his own financial issues. So in that case, his equity exposure will come down to 60% and his fixed income will increase to 40%, correct? So this is something we have to keep it in mind. Another important aspect, above the age of 50, obviously 50% could be equity and 50% could be fixed income. And above the age of 60, 20% will be equity and 80% will be fixed income. So that is something we have to keep it in mind. Just one second. Yes. पर उसको ऑलरेडी बोला था। हाँ, सुबह तो मैंने बात की उससे। हाँ मैं भी करता हूँ। मैं समझ गया। ठीक है मैं करता हूँ। हाँ। हम्म। 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 ठीक है। हाँ तो बस तो सिर्फ सभी एनएससी का आप जाके निपटा दो ना तो फिर। हम्म। लेकिन वही इश्यू है ना। हाँ तो लेकिन आप बीएससी एनएससी का पहले निपटा दो ना, बिल्डिंग में अगर आएगा तो राजेंद्र और यूनुस है ना, वो लोग नीचे जाके ले लेंगे। बराबर है ना, आप समझ गए ना चीज से। अरे वो टेम्पो का कुछ बोल रहा है ना, मैं क्या बोल रहा हूँ कि सभी एनएससी ज्यादा इंपॉर्टेंट है ना। आप यही बोल रहे हो ना कि आप वहां चले जाओगे तो सभी एनएससी आशीष की गाड़ी में आप वहां से डिलीवर कर दोगे, बराबर है। बीएससी में अगर दो, हाँ बीएससी में अगर 2 बजे आता है तो ठीक है। यूनस यूनस तो है ना अभी ऑफिस में। हाँ बस तो वो दोनों मैगजीन ऊपर ले आएंगे, ठीक है। फिर भले बीएससी में 5 बजे डिलीवर होगा, उसमें क्या होगा। मेन तो सेबी और एनएससी का है ना, वो आप जाके उसके साथ निपटा लो ना। बस बस। हाँ तो वो निपटा लो निपटा लो डन। नहीं नहीं, पर इतना लेट क्यों करते हो आप? आप 12 बजे निकल ही जाओ ना, तो फिर सेबी एनएससी का पहले निपटा लो ना, वेट क्यों करने का। ठीक। हाँ जी मिस। हाँ मैं बात करता हूँ, अभी कर रहा हूँ, अभी कर रहा हूँ भाई, अभी कर रहा हूँ। Friends, just give me 1 second. There is some urgent work. Just give me 1 second. हेलो आशीष। अरे बेटा શું થયું? પેલું બીએસસી માં 2 વાગે પહોંચાડશે, આપણે તો વાત થઈ ને સવાર। કેવી રીતે કરશું? તો પછી મેં ઉલ્લાસને એમ કીધું છે કે ઉલ્લાસ તારી પાસે આવે તો સેબીને એનએસસી નું પહેલા પતાવી દે, પછી ભલે 2 વાગે બીએસસી પહોંચાડજે તો રાજેન્દ્ર અને યુનસ મળીને હેલ્પ કરશે। હા હા ના તો એક મિનિટ, વિસ્પી સર નો આવે છે, વિસ્પી સર નો આવે છે, હું તને 2 મિનિટમાં કરું। હા।
Sir, your voice is not audible.
Sir, just give me 1 second. There is some issue in SEBI, so just give me 1 second. Sir,
Okay,
I'll just
sir.
initiate the lecture.
Okay. Students, please wait. Sir is doing some thing. There is a technical issue on sir's side. So students, please bear with us. Friends, I hope you are enjoying this particular session related to wealth creation.
Yes. So basically, see what happens is what we were trying to discuss was that as age increases, now friends, what will happen? The exposure to equity will go down and to fixed income will go up. So always remember that 100 minus your age is ideally your equity exposure. But as I told you, that asset allocation is highly personalized in nature. Now we will try to see, okay, what are the assets that should be there in your portfolio so that you are in a better position. See, there are primarily, if you see, 9 kind of assets which you have to keep it in mind, which can be actually used for asset allocation. So if we start with the first is cash. See, cash is something which is the most liquid instrument. So cash, typically we say cash balance should be maintained for 5 to 6 months in hand. For example, if your monthly expense is 20,000, then 20,000 into 5, 1 lakh rupee should be there in hand, or it should be there in your ATM, which you can, in your bank account, which you can withdraw easily. Friends, cash is something very important for handling medical emergencies or any kind of unproven incident. So that is why today liquidity is given enough importance. If you see from a corporate perspective, it refers to your current ratio. That means current asset upon current liability, how quickly you are able to honor all your current obligations. Second important aspect of asset allocation is stock market. Friends, the wealth which equity markets can create, no other markets can, or no other asset class can give you. Now, if we try to see how markets behaved in these last 2 years and what kind of wealth it's created, then if you see globally, stock markets corrected by 30 to 35%. Sensex crashed from 42,000 levels to 25,600 in 2020. The reason was FII sold shares worth 61,000 crore rupees in basically one single month of March 2020. That was the highest ever selling done by foreign institutional investors. But trust me, friends, that had you bought shares during that month, your money is more than doubled within 1.5 years. If you see, friends, the chronological events, then in January 2020, FIIs invested 20,000 crore rupees. In basically February, they again invested 10,000 crore. So markets were going well. But then came the month of March 2020 when the pandemic spread across the whole world and FIIs became net sellers only, where they started selling shares worth 61,000 crore rupees in 20 trading sessions. So as a result, what had happened was that highest ever selling was done by FIIs in the history of Indian capital market. So as a result, in Jan and Feb, markets went well, but in March 2020, markets crashed out because of panic selling done by FIIs. But friends, that was the month that those whoever invested money in that particular month, in more than 1.5 years, their money doubled. The reason was Reliance Industries was available at 900 rupees. Today it is 2,400. Maruti was available at 4,000. Today it is 8,000. Infosys was available at 650. Today it is at 1,700. So there are plethora of such examples. That time, friends, not only Sensex, but even globally, all markets crashed out and there were huge corrections. Globally, all stock markets corrected by 30 to 35%, and our markets corrected by 38%. Then came, friends, April 2020, when FII sold shares for 1,800 crore rupees as lockdown was implemented. So FIIs reduced their selling pressure. In May 2020, if you see, friends, FIIs became net buyers to the tune of 14,500 crore. In June, they bought shares worth 20,000 crore, and in July, they bought shares worth 7,500 crores. Finally, what happened was that FIIs started buying in a big way. The reason market started settling down. And then the year 2020 became a year in which they invested 1.68 lakh crore rupees. If you see, friends, from March to June, Sensex gave a return of 30% as it sharply bounced back. The reason for this sharp bounce back was investments done by foreign institutional investors. The valuations became very attractive, and as a result, markets skyrocketed. In fact, global money came like anything because USA had printed $2.5 trillion. One thing, friends, always remember that in the long term, if you want to make wealth, equity markets should always be there as a part of your investment strategy, because none other thing can give you as high return as equity markets. From 1979 till date, if you see, the CAGR return of equity markets was 16.5%. The third instrument is basically mutual funds. See, mutual funds are an indirect route to stock market. See, typically speaking, those who don't like those who don't have time rather to invest in stock market, those who don't have knowledge or capital is an issue, for them mutual fund becomes a vital concept. So if we invest in mutual funds, obviously things are very, very critical and important. So here, if you try to figure out, friends, then there is sufficient time. If you go in mutual funds, the benefit is that you can go with an SIP investment. SIP is systematic investment plan, whereby you can invest on a monthly basis and can generate good returns. For instance, if you see, one can right now 8,000 crore rupees is coming into stock market through the SIP route. In fact, monthly one can start with minimum 500 rupees of investment and also can create wealth. In mutual funds, one can do SIP in three things: large cap diversified stocks, index funds, and sector funds. So these three play a very critical and a vital role when it comes to mutual fund investment. Today, friends, mutual funds have become the backbone of Indian stock market. Correct. They have become, friends, a backbone of Indian stock market, and hence they are an important source of long-term investment. So this is something, friends, we have to keep it in mind. Gold prices per 9,000. If you see gold as an asset class, friends, yellow metal has always been critical for having a hedge against inflation and also a hedge against equity markets. So if you see gold prices were 9,000 rupees per 10 grams in 2007. In 2008, during global financial crisis, the prices reached 33,000 rupees per 10 grams. So basically, gold prices went up like anything during the global financial crisis. If you see here, friends, then gold is considered as a safe haven. The reason is it is highly liquid instrument, correct? It's a highly liquid instrument. So whenever institutions feel that basically there is a problem at global level, they will withdraw money from other asset classes and they will put it in gold. Friends, typically speaking, gold has an inverse relationship with three things: stock market, macroeconomic data, and US economy, correct? These three things, gold always has an inverse relationship. As I told you, friends, when stock market crashes, gold prices will rise. When IMF or World Bank says that the world economy is weak, gold prices will go up. When US data is weak, gold prices will rise. So in short, any bad news in the world economy is good news for gold, and any good news in world economy is a bad news for gold. So that is something, friends, we have to keep it in mind. Remember one thing, friends, that gold as an asset class is an important tool for hedging against inflation and hedging against bad times. If you see, friends, Indian households have 25,000 tons of gold. So gold is the second largest item in India's balance of payment after crude oil. It is the second largest item which we import after crude. In 2015, when Chinese crisis came to light, the price of gold increased from 25,000 rupees per 10 grams to 29,000 rupees per 10 grams. So drastically, gold prices went up. The reason was that this economic slowdown which had came in China, it motivated the institutional investors to withdraw money from other asset classes and they put that money in gold. Is gold investment productive, friends? Now that is something very critical and a vital aspect. See, gold investment is not productive. The reason is basically if you put your money in equities and fixed deposits, that money will circulate in the economy. But gold gets blocked. The money invested in gold basically gets blocked. So here what will happen if you see last 100 years return of gold, it was only 6%. Last 40 years return of gold, it is around 9 to 10%. Now, if you compare from 1979, the year in which BSE SENSEX was formed, the return of Sensex was 16.5%. So ultimately, equities outperform in the long term. But friends, as a matter of fact, the way basically equity and gold are interrelated, it is very important that basically gold ultimately rises whenever there is a problem. Now, currently, if you see Russia-Ukraine war, the way it is going, equity markets world over came down and gold has gone up. One can easily have, friends, 10 to 15% exposure in gold, and this could be in the form of gold ETF. Gold ETF is units which basically directly come in your demat account. So that is why gold ETF plays a very critical role when it comes to investments, friends. You can average out your investments and you can really get good returns. Sovereign gold bonds are also an option, but the problem is that there is a lock-in period of 5 years, and after 5 years, when you redeem, the risk is that if the gold price is down, obviously you will get less money back. Then comes property. See, property as an investment asset class has lost its charm. From 2003 to 2013, if you see, friends, property market gave very good returns. But today, if you see, real estate has two major issues. One, huge oversupply, and second is unrealistic pricing, correct? So these two things have a major problem as far as basically this property market is concerned. So this is something we have to understand. Today, friends, if you buy a property, buy it for consumption purpose, that is for living purpose, not for investment. Investment will always create a problem. So here we have to keep one thing in mind, that commercial property will have bad times because work from home or basically this hybrid model of working is still going to survive because of its cost effectiveness. So that is something we have to keep it in mind. As far as insurance is concerned, friends, see, insurance is something very, very important. And today, the importance of insurance is that it has been accepted as a main source of investment. It is the main product. In insurance, you should have two things in hand. One is term plan and one is Mediclaim. See, term plan is something which you should always, for which the head of the family should be protected. So in case if something happens to the head of the family, the nominee will get a huge amount. So that is why term plan is important for the head of the family. Second is Mediclaim. As far as Mediclaim is concerned, friends, basically why it is important in case of Mediclaim, friends, you can always have cashless facility, correct? You can always have a cashless facility which protects your earning. So this, again, this particular aspect is very important. Remember one thing, friends, that Mediclaim and term plan both play a very critical and a vital role as far as investment aspect is concerned. So insurance is something, friends, which should be there as a part of your investment strategy. If we talk of FD, friends, fixed deposits, though traditional, but are very important source of allocation, correct? So FDs play a critical and a vital role. In FD, the benefit is you can break the FD and you get your funds immediately back. So that is why fixed deposits are an important source of investment. It is safety of capital also and liquidity also. Provident Fund, friends, is something which is basically there is a lock-in period of 15 years, and it is safest and most tax efficient instrument. So Provident Fund is something, friends, which is very, very critical and important. Remember one thing, that when you invest in Provident Fund, it is completely exempted from taxation, and this can be used as an important source for your retirement planning, friends. Finally, friends, remember one thing, as far as conclusion is concerned, friends, that asset allocation will always differ from person to person. So each person will have his or her own risk-taking ability, correct? They will always have their own risk-taking ability, and hence it is important and a vital concept. Remember, friends, ultimately you should always have both things in your portfolio, equity also and debt also. So this is something very, very important and vital. Remember, friends, finally, the conclusion part, that when you invest, you have to take a proper care of your investments, because investments will lead to financial fitness and ultimately financial independence. Yes, sir. So now we can go for question answer session, sir. Any doubt, difficulty, or anything is there, the audience is absolutely free to ask, sir.
So the students has raised some question. What do you mean by the asset allocation? Why it is a need for it today?
Yes. See, basically,
Because the students are basically they are the students. It is from the students' point of view.
So see, beta, why asset allocation is so important. See, when you start earning, when you get your first salary, and when you start earning, it is important that you identify variety of assets in which you want to invest. Correct? Because if you don't identify the assets, how will you do investment? And when you are identifying, it is equally important. See, it is equally important that you try to understand the kind of basically risk involved into this. Correct? So this is something we have to keep it in mind. Remember one thing, friends, that whenever you are investing, your investments have to match your risk-taking ability, correct? So everything goes, friends, hand in hand, correct? There is nothing which is absurd or abnormal. Everything will go hand in hand. And that is why investments play a critical role. Here, always remember one thing, that when you are investing, if you identify assets, then only you will be able to generate good amount of money in the long term. Otherwise, you won't be in a situation to generate good amount of money. This is something we have to keep it in mind. So that is why, friends, asset allocation is so important. Yes.
So the second question is raised by the student. If the students are earning around 12,000 rupees per month, since they are the students, so what type of savings should they do, and how they should go for the asset allocation?
See, then ideally they should start with two things. They can do a 2,000 rupee fixed deposits every month, so that it creates safety of capital, and then another 2,000 they can go with the mutual fund SIP. So then that becomes a very safe strategy primarily to go with.
Sir, for those senior citizen, those parents are there, they are having some fund, the pension fund, and those amount they are being invested. So one of the student asked, what should they guide to their parents?
The parents basically, see, they can always go with safe instruments only, because in case of retirement and other things, you need more amount of safety of capital. So ideally, they should go with fixed deposits, provident fund, or a bank FD in which they get interest in their bank accounts. To be very frank, that would be a more safer strategy, keeping in mind that the parents are old and basically they would be needing money after retirement.
Sir, the last question, one of the students is raised, which is the better site where they can get the information, because many news channels are there, and there are many news channels that are also pouring about the investment, which is the better website or where they should believe for investment. Because in this last financial year, 21-22, we have conducted 5-day program. Students are more interested because now something is moving, the money is moving now, the economics is moving. So students want to get the better information, which is the better website. It would be where they can get the proper and better information.
They should,
according to you.
Yes. See, basically the best source of information and the reliable, rather what I typically do is that they should ideally try to go with this thing. they should ideally go with economic times. Economic times is something very, very critical and important. They should always try to figure out that economic times newspaper is one of the best, and second is money control website, because that will give them latest updates and everything. So economic times newspaper and money control, these two things they have to keep it in mind.
Okay. Sir, last question from my side. There are many news channels who are covering up and many speakers, resource persons speaking. How far the knowledge is reliable?
No, sir, see, I am nobody to comment on somebody's knowledge, sir. But yes, obviously, at least whatever they are reporting, obviously they are based on facts and figures. So that should not be a problem. Only thing, as I told you, is basically that whenever we invest, we have to see what is our capacity to understand one thing, and second, how comfortable we are in investing things. See, investment is something we should not basically this thing.
Sir, legally, if you speak with bank, we have integrated banking ombudsman scheme 2021 for any dispute related to banking business, and we for the investor, which are the grievance redressal forum, and how far they are, which are the machineries where to report.
See, as far as there is problem related to stock market or anything, sir, the first thing is they can report to the broker only, because broker also needs to maintain a complaint book. In case if they are not satisfied with the response of the broker, they can complain to stock exchange cell where there is this grievance, stock exchange grievance mechanism is there. And even if they are not satisfied, they can directly complain in SEBI also through the score system.
Okay, very good information, sir. You said, because in bank we have principal nodal officer, the nodal officer, and then we have to go to the ombudsman. Here you rightly said that these are the regulatory bodies which take care of the brokers and the authorities. So students, we are happy and feeling delighted. Also, the Dr. Aditya Srinivas sir was the speaker for this particular session in the opening financial year. Thank you, the S.S.T College of Management, the founder principal sir of our college, Dr. J.C. Purushwani sir, IQS coordinator Kushbu Purushwani, and for giving the opportunity for the students to conduct such webinars. With this, I'm declaring this session is over. Thank you, sir, from myself. Thank you.